Hello everybody, in this video I will explain how to lower a mortgage. This is based on my personal experience. I'm not a professional, so before taking important decisions, please ask an expert. Let me give you 4 tips to lower your monthly payment, and to save money. First tip, refinancement. You have a mortgage with a bank at a certain interest rate. If you find another bank with a lower interest rate offer, you could decide to switch to this new bank. This is possible with a refinancement operation. The new bank gives you the money to close the mortgage with the current bank. You give back the money to the current bank, you close the current mortgage, and you have now a mortgage with the new bank. You will pay a lower interest rate and a lower monthly payment. If you consider, for example, a $400,000 loan, with an interest reduction of 0.5%, you could save $100 per month. For the whole new mortgage length, you could save up to $40,000. The second tip is to select the variable interest rate. This is more risky, but with a good strategy, you can lower the risk, the monthly payment, and the final global savings. The fixed interest rate has a constant monthly payment. The variable rate has a variable monthly payment. If we compare them, there are some periods where the variable one is lower than the fixed one. The strategy is to understand when the variable rate goes down and is much lower than the fixed rate. In this period you save money. If you give back to the bank this saved money, with an extra payment, you will lower the residual debt. This will generate an overall reduction of the next phase of your mortgage. The more saved money you give back to the bank, the more reduction you get for all the next months. This operation permits you to save a lot of money, based on a good strategy. Third tip, avoid or remove the private mortgage insurance. If you have a down payment of less than 20%, the bank has to lend you more than 80% for your mortgage. In this case, the bank asks to be protected with an insurance. The problem is that you pay an insurance to protect the lender. A typical monthly private mortgage insurance is around $100 to $200 high. To avoid this bad insurance cost for you, you need a down payment higher than 20% of the total amount of money needed to buy the house. The bank lends you less than 80% and does not request an insurance. If you begin with this insurance, from year to year, when you reach with your payments more than 20% equity, ask to remove this insurance. Tip 4. Boost your savings and reduce the debt. If you save some money, it could be a good idea to reduce the mortgage debt. With an extra payment to the bank, you can reduce your debt. The bank reduces your monthly payment. You save more money. You perform another extra payment, to reduce again the residual debt. The bank reduces again your monthly payment. You can repeat this cycle every time you save money you don't need. If you have big problems, and you need to reduce your debt, and you want to save more money, you could, for example, rent a part of your home to boost savings. These are the 4 tips to lower your mortgage, and to save money. With these 4 tips and a good strategy, you could save hundreds of dollars per month. If this is not sufficient, there are other 2 useful tips to lower the monthly payment, but not the final total mortgage costs. Tip 5. Extend the payment term. A mortgage has a monthly payment, an interest rate, and a time length. If we extend the repayment period from 20 to 30 years, we reduce the monthly payment, saving, for example, $200 per month. In this case, we have a monthly reduction, but the global mortgage costs rise by $30,000, for example. This, because we extended the mortgage from 20 to 30 years, generating more interest for the bank. Be careful. Last tip, pay only interests. As the previous tip, this is another scenario where we can reduce the monthly payment, but not the global mortgage costs. This is an example of an amortization schedule. Every monthly payment of $555 has a principal quote and an interest quote. The principal quote reduces the residual debt of the next month. If you want to reduce the monthly payment, you could ask to pay only the interests, and to stop for a while paying the principal quote. This way you reduce your monthly payment, but the residual debt is constant, until you begin again to pay the principal quote. This is a temporary problem solver, that you should not abuse, as it rises the global mortgage cost due to higher interests. I hope this 6 tips can be useful for you. Please prepare a strategy before deciding to best reach your targets. Thank you for watching Simple Money Tips. We are working on other business examples. If you have questions, write them down here. If you want, leave a like or subscribe to this channel. Thank you very much.